What's going on, everyone? Today, I'm going to walk you through the process of preparing a statement of cash flows. In order to do a statement of cash flows, you need to begin with two things. The statement of cash flows is the very last financial statement that you prepare, because in order to do it, you need the results of the other financial statements to get there. To do a statement of cash flows, you need the most current income statement, as you can see right here for Boswell Corporation, as well as this most current balance sheet and the balance sheet from the previous year. So 2 years of balance sheet information, as I have right here. The statement of cash flows is broken down into three major sections, three activities: the operating activities, the investing activities, and the financing activities. Now, to be able to complete a statement of cash flows, I like to think of a statement of cash flows as a big puzzle that we put together from the results of the income statement and the balance sheet, as well as the additional information that's presented to us. In order to put that puzzle together, we have to have a good understanding of what goes where. For the operating activities, think of the operating activities as the results of our operations, or all of those transactions that resulted in us gaining income. Therefore, to be able to do the operating activities section, from those previous financial statements that we did, we need all of the income statement. And we also need changes in any current assets and current liabilities from that balance sheet. The reason that we also need those current assets and current liabilities is due to the fact that if I think about those income statement items, sales, for instance, when I recorded those things initially, they also affected current assets or current liabilities from the balance sheet. So back to my example, when we initially recorded sales, we debited accounts receivable, which is a current asset, and we credited sales. When we initially purchased inventory, which eventually makes it to cost of goods sold on the income statement, we debited inventory and we credited accounts payable. All of those income statement items have to pass through current assets or current liabilities on the balance sheet. That's why we need both the income statement as well as changes in current assets and current liabilities from the balance sheet. In the investing activities, think of the investing activities as changes in any long-term assets that that company has, whether that be buildings, land, vehicles, investment accounts, notes receivable, whatever long-term assets that company has. Those are all categorized into the investing activities of the statement of cash flows. Therefore, for the investing activities, I don't need any of that income statement. We use that all up in the operating activities. The only thing that I need are changes in long-term asset accounts from that balance sheet. For the last section, financing activities, think of this section as how is this company financing their assets? Now, you know from very early on in accounting, we really had two major ways to do it. We could have contributions from those owners. If it was a proprietorship, we call those investments. For a corporation, we call that issuing stock. Or we could go to the bank and we could request money through a loan. Essentially, we still have the same things that we now need to keep track of in the statement of cash flows. So how have those things affected cash? So in that financing activity section, we really want to think of these as obtaining resources from the owners or returning resources to them. So that is all contained within the stockholders' equity section of our balance sheet. We also want to talk about obtaining resources from creditors and or returning resources to them, which is found in the liabilities section, and most often that would be long-term liabilities within our balance sheet. So once we have this basic understanding, what we want to do is we want to sort through our income statement and our balance sheet information to make sure we understand what section everything we see on there is going to flow to. Because as I said, what we want to be able to do is we want to take all of these pieces of the puzzle that we see here, and we want to put this puzzle together. We want to show a completed statement of cash flows. So looking at my financial statements over here, as I know from what I just did, the entire income statement everything that I see on my income statement for Boswell Corporation here. That entire income statement, from beginning to end, sales all the way down through net income, I want to make sure I hit on every single piece of this within my operating activity section. So I know all of this that's highlighted here, that's all going to be part of the operating activity section. All right, I said I also wanted to have current assets and current liabilities in there. All right, we always ignore cash because we're doing the whole statement to prove that difference in cash. All right, but the other current assets that I see here, accounts receivable and merchandise inventory, they're going to be part of my puzzle in the operating activity section, both current assets, as well as accounts payable and income tax payable, those liabilities that are going to be coming due within that next year. So I know in the operating activity section, before I get through there, I'm going to need to check off, I'm going to need to verify the difference in accounts receivable, inventory, accounts payable, and income tax payable. In my investing activity section, long-term assets, I just have these two accounts that I need to worry about, trucks and accumulated depreciation from those trucks. In my financing section, 3 accounts that I need to worry about, common stock, contributed capital in excess of par, common stock, and retained earnings. Once I can check off, once I can verify each of these accounts and I can show how the change in those accounts affected cash, I'll be finished with my statement of cash flows. So the next step then is going ahead and doing it.